What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are back with everyone's favorite series, Crazy Bets in the Stock Market, featuring Wall Street Bets. We have some insane trades that happened this week. So if you are excited for today's video, as always, make sure that you like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. I'm going to try to go through all these as much as I possibly can because, believe it or not, this one is a long one. There was a lot of money that was printed in the market this week, and you might be able to guess some of these as we know here. So we're going to get right into it without further ado. The first position we have here is, again, these are all anonymous, by the way, is I'm not having fun anymore. Down year to date, $117,000 in options trades. Now, again, the point behind these videos is to make it educational and to say, you know, here's what you could do, here's the good, here's the bad, and kind of give you this overall perspective of what people are trading with. Now, if you are somebody who might not be profitable trading options, if you're down $117,000, it's never a bad idea to take the whatever money you have left over, put it into an index fund, and then regroup and reassess your strategy, right? So options isn't the only way for you to make really good money. You can also buy index funds. You can just buy actual companies and buy shares of like Nvidia, Apple, Microsoft, Google, Tesla, whatever, and you can make money long-term that way as well and still make very, very good money. Options are a very risky strategy that you can play, and you might see people printing hundreds and thousands of dollars and you want to get in on the action. And the point of this is to say, hey, not everybody's going to be a winner. As someone's making money, someone is also losing money as a result. So things to keep in mind about as we continue to trade options potentially or to trade stocks in general. Just keep that in mind that there's always going to be a winner and there's always going to be a loser on the other side, no matter what. And you want to be the winner, obviously, but it's unfortunate being down, $117,000, but it's down 8% year to date, which means it seems like he's got a very, very not profitable, but very, very high value portfolio of probably over $1 million is what I would guess off the top of my head. So, but that's another thing to talk about. Now, this one says, please accept me as your fellow. And you know that word. That's the word they use on Wall Street Bets. And because on Robinhood, you can, if you didn't already know this, you can actually bet on predicting things like predicting interest rate cuts, inflation data, Bitcoin prices, who's going to win this event, who's going to win this event. So Robinhood has really upped their game and has brought in this idea of predictions in this case. This person bought 10,000 contracts at 3 cents each that the feds don't cut the rate in September. And, with the data that came out with CPI and PPI data coming out, but I think the market is just too fueled by this rate cut. Like nothing is stopping this market from moving. And they're expecting a rate cut to come in September 19th. So I believe it's, or September, something like that. It's like next week or a week after. I'm not really quite sure. Maybe not the 19th, but things to keep in mind about is that, it's not, this is like $300, but 10,000 contracts. If this hits, these all go to $1. So he makes $10,000 on 300, which is an unbelievable return. But, just some fun money I guess he threw in at it. So that was really interesting. I have not seen this yet on Wall Street Bets when I've scrolled. So just something that was really, really interesting to see here. And, hey, when everybody's betting for a rate cut to happen, it's never bad to bet against it. You might be in the minority side of things in terms of like, majority are on one side, you're on the minority side of things, but you never know what could happen, obviously, in, the next week or so. Who knows? We had, again, data didn't come out that good. So if Jerome Powell insists and the Feds come back and say, nope, we're actually not going to cut rates, that's gonna mess up this market big time for sure. But this guy will make some really good money. So this person said, I was touched by the Winklevoss twins today. Now, again, if you don't know who the Winklevoss twins are, I believe I learned this from Ryan in the Kingdom. Shout out to you. They were part of the Facebook Foundation and stuff like that with Mark Zuckerberg and something like that, or something like that. And then, they were out and Zuck took over. I don't know. I haven't really looked more into it. I got to watch the movie about Facebook and stuff like that. But besides the fact of that, they are also the ones who are behind Gemini, which is your crypto exchange. And, it IPO'd this week at the time of recording this video. And it looks like he's down $12,000. And he looks like he basically full ported it, 94.45% invested into it, $117,000, bought 3,500 shares. I'm guessing that he bought after the IPO came out, and he probably bought probably right around there, maybe is what my guess would be, and now he's down about 10%. IPOs, guys, are very, very tough to buy into, okay? They're very risky. You don't know what's going to happen. We had a bunch of IPOs this week. We had Klarna this week. We had Via Transportation. We had Gemini, and then we had the last one, which was Figure Technologies, right? Now, I was able to get a couple of shares of Figure and a couple of shares of Klarna. Klarna, I was able to walk away with a very, very small amount of profit because it didn't really do much. It ran up really quick and then it came right back down really quick right after that. Same thing with Figure as well. Made some money on Figure, which is good at least. But again, these IPOs are very, very risky to trade. And again, I bring this to your attention because if you see people saying, I'm going to fully allocate shares and I'm going to full pour into these IPO shares, you got to be very, very careful with IPOs. And again, this is an example right here. This person, I'm guessing, bought the hype when it first took off and it opened up on the markets. And now he's down $13,000 in probably a matter of, a couple hours. So that's actually insane. So, but obviously at least he has shares so he can just hold it long term. I'm not someone who believes in Gemini right now. They're not profitable. They're burning cash. I don't believe in Gemini as a company long term, but I could 100% be wrong. I'm not going to sit there and say, oh, I'm the know-it-all guru guy here, but I don't believe in Gemini, so I wouldn't even buy into it. But, this person, when the options chain opens up, he can sell some options on it, which would be really nice as well. Full port, 0 DTE, SPX blown account. This dude lost $35,000 on 0 DTE SPX account, on SPX options, I'm guessing here. Basically, 0 DTE stands for 0 days till expiration. Basically, you're gambling money for the day, every single day, every week, every month, whatever. And, if you're just trying to predict what the market will do every single day, you can only be right so many times before you start to be wrong. And at this point in time, this person lost $35,000. 0 DTE options, to me, is the riskiest and worst idea to trade stocks with. That's my opinion on things. I'm not a financial advisor, but 0 DTE means you are expecting the stock to move the exact way that you want it to. And if it does not, you are going to lose money quick. This person lost $35,000 in one day. One day. That's all it took. Lost all $35,000 of it. It's something where you would have to either be an expert or you'd be trading small allocations of it if you want to gamble, for news events and whatever, sure. But 0 DTEs are just a bad idea. I don't think I've ever done one 0 DTE in my life. I'm trying to think if I have or not, but I don't think I have because, again, all it takes is if the stock needs to move up, 10%, or not 10%, like 1% of the day, like SPY, for example, and it goes down like 0.01% or whatever, you already lose a lot of value because, again, the more it moves against you, the more money you're going to lose. So, those 0 DTEs. Don't worry, we got some money here. First one here with some good profit here. This person right here bought TSLL, which is a leveraged Tesla ETF, as we'll see here. Now, why did I put this one in here? He only made $4,600. It's not the amount of money he made, but look at the percent return. He bought these August 25th. Each contract costed him $1. It's 1 penny per share, and each contract is 100 shares. So each contract essentially costed him $1. My dude put $57 into these TSLL calls, and he made over $4,600 today, or yesterday, at the time I'm recording this, because Tesla took off. There was some good news, I believe, that came out in, I want to say it was like Nevada or something like that, about their autonomous driving and stuff like that. And Tesla shot up like 5, 6, 7%. And this dude printed because it's leveraged, right? Leveraged ETFs like these are very risky. Don't get me wrong. But the fact is that when you're buying a leverage one, if Tesla moves up 5, 6%, this one's moving up, double, triple it, right? So if it goes up 5%, this TSLL is up 10%. So leverage ETFs are definitely a good way to, leverage your position, essentially. But this person right here bought him $57. Just took $57, threw it in there, and he made almost $5,000. Unbelievable returns here. So shout out to you, my friend. Absolutely amazing. They expired yesterday, so I'm guessing that you probably closed it out and didn't exercise it. I would hope. But we who knows, right? On the next one. So this one leads into the next section of Wall Street Bets here. Okay. This is Loan Depot. All right. If you're not familiar with Loan Depot here, this person put, $16,800 or something like that. Looks like into Loan Depot, $4.50 call options for September 26th, about 2 weeks out at the time of recording this video. The big bet here is that you want to look at getting into Loan Depot because, and this is the logic to this here, okay? With rate cuts coming in potentially next week. Again, that's why I say if rate cuts don't happen, this is how you blow an account really quick, okay? You are banking on a stock that's going to perform very, very well with rate cuts, but it's a short-term play, okay? It's still 26. If you wanted to go till January, till February, or, even 2027 maybe, if you could, like, that would make more sense because more rate cuts will come in, and there's rate cuts that are going to happen at some point in time. We just don't know when. People are thinking it's going to happen the next Fed meeting, but what if what if Trump Powell says, nope, we're not going to do it? This will probably crash. Open Door's going to crash. We'll talk about Open Door in a little bit here. But this is kind of like a follow-up play to Open Door with Loan Depot because they do very well with lower interest rates because they talk about, mortgage loans, titles, financing, those kind of things. And those companies do very, very well, like real estate and stuff like that, when rates are lower. So, for example, for me, I have a LEAP option on Toll Brothers because Toll Brothers is a real estate development company that develops luxury real estate. When rates come down lower and mortgage rates come lower, people borrow for cheaper. They can buy a house. They can do whatever. And that's going to be more money for these kind of companies. That's the logic and the idea behind it. But again, mine's a LEAP option that goes till 2027. This one expires in 2 weeks. So this is kind of what the logic is behind it. And it's going to lead us up into in Open Doors positions a little bit later on. But anyways, besides that, so next one we have here, $150,000 on AMC. Now, first thing to keep in mind about this person put $150,000 in, but it's only 15% of his portfolio here, which means that he's looking at $1 million portfolio. Okay, so keep that in mind. It's $1 million portfolio you're looking at right now. So this is not like he's full pouring the whole thing in here. But he is putting quite a little bit of money into here. But I think his logic here is kind of going off of what this is saying up here from Robinhood's AI-powered not advice section, is that Netflix adds popular AMC series building on strong 2 earnings for Q2 and positive analysis views and deepening the partnership between Netflix and AMC. And as we know, Netflix is a very expensive company, very, very profitable, and everybody almost has Netflix, I feel like, these days. So having that idea with partnering with AMC and Netflix could be very good for AMC. That's the logic behind it, but $150K into it, we shall hopefully see. At least he bought shares, so he could sell cover calls in the meantime if he wants to, or he could just hold the shares and hope for the best. Tilray, $300,000 full port into this portfolio here. I don't really have much. The Fed, not only are you full porting into a stock like 300,000 6 figures worth, but you're full porting it into a penny stock. And that's where the real risk is for me, because this thing is worth $1 for a reason, right? This stock is worth $1 for a reason. If it was a valuable company, I feel like it'd be worth a lot more here, but $300,000 into Tilray Brands, I believe. 100% portfolio investment into it. And I didn't really look to see if there's an explanation as to why. I'm not really quite sure. But, that is just absolutely insane. I don't know if they do options. I don't know if they can even have options because they're such cheap stock. I don't know. But good Lord. I had to put it in here. I was like, that's insane. 300. Not only are you, if you want to full port, at least full port into a company that has more value, like NVIDIA, for example. NVIDIA, you could buy, hundreds of shares in NVIDIA and then sell options against that one if you want to. Google, Tesla, same thing. Amazon, Facebook, whatever you want to buy into, but not 300,000 to a penny stock. But you know what? Maybe it'll pay out. And again, we'll look back on this, we'll laugh, and I'll say, wow, I can't believe this worked out. But, you never know with these kind of trades here. Okay, this is where things got absolutely insane, okay? Open Door had a monstrous week this week. Rate cuts are good for Open Door because Open Door focuses on real estate. So Open Door benefits from rate cuts. They also, I believe, had more money come into their company as an investment. I'm not really quite sure the numbers behind it, but that's bullish on the company as well. They also had new board members added into it, which was also bullish or something like that. I don't really have the exact information, but the stars just aligned and Open Door as a meme stock that was a meme stock. I don't know if you really consider a meme stock now, but Open Door that was a meme stock quite a few months ago, at least like 1 or 2 months ago, now had the stars aligned. So not only is there a lot of bullish news that came out in Open Door, now that it's a meme stock and people are hyped behind it, it just took off 80% in a day. This dude is up to $4 million on this, which is just wild to me. And then he's up another $2 million. Like, this dude is just printing money with Open Door, and these don't expire until January 2027. These are how you do leap options. This is the way to do leap options, okay? You buy options that have over a year out, and it just prints cash. Like, look at how much money he's up. It's unbelievable. Now, obviously, yeah, this does take a lot of money to put into it. Don't get me wrong here, but again, it's insane. He put like $130,000 here, it looks like, into it. Then he put like another almost $100,000 here. So he put a couple $100,000 in it. So this is where these gains come from. But oh my goodness. And again, rate cuts come in. Open Door keeps rocketing. Oh man, this dude's printing some money here. There's a lot of money to be made here. I had to stop going back through Wall Street Bets because there's just so many images. And I don't want to make this like a 45-hour long video. But man, it was Open Door after Open Door after Open Door. And people were just printing cash with Open Door, right? Look at this. Another one. This dude became a millionaire because of Open Door. He bought 100,000 shares at $2.39 each. So he put $239,000 into it. And now he is officially a millionaire just with Open Door. His next picture, I believe, was like 1.3 million portfolio because he's got a little bit of money left over. But this guy, shout out to you, my friend, man, making $1 million. But again, the thing to keep in mind about with these kind of hypes like this is that at some point there has to be a pullback. At the time of recording this, I believe it pulled back down to at least like $9 per share. So we've been down at least 10% already at the time of recording this. So you got to be careful. And people, here you go, look at this. Open Door shares jumped 83.4% as the new CEO and founder returned Spark AI-driven strategy. There you go. So there's their new the news that broke that put it up 80%, which is crazy. But the thing to keep in mind about, and he did shares, so good for you for doing shares, obviously. Honestly, now I would probably try to look at maybe selling some covered calls, maybe not in all the shares, but just some of them, because those premiums have got to be juiced right now for Open Door, in my opinion. But the thing that's crazy to keep in mind about for these kind of things is that when you see people on Wall Street Bets, on Instagram, on TikTok, posting all these gains, and then you want to hype into the game, you want to get into the game, and you want to buy up into it, you might be buying at the top. So it's things to keep in mind about where stocks that run up this much are going to have some pullback. People are going to take profits. That's always going to happen. It will not run up forever. Okay, people will take their money off the table, because I definitely would. But this guy right here, you can take all this money out, take $1 million out now, and then just put it into the S&P 500, and you make $100K a year for the rest of your life, because 10% on average return, and plus dividends, right? So you can make a lot of money now. So this person could take all of his money out if he wanted to, and just put it back into index funds or whatever. So just something to keep in mind about. This person said, this was interesting. This person said, did I win? And I was like, what are you talking about? He got Rocket Lab deep in the money. Well, I wouldn't say, maybe deep in the money. I'm not really sure. He bought $3 call options for Rocket Lab back in May, and it cost him $2.82. So he paid, I think, total, like 282 times 3 is like 700 or what? 700 math, like maybe close to $800, something like that. I don't know off the top of my head. It doesn't matter, guys. But look at this. It went from $2 now to $45. Look at this return, 1,500%. And he still has until December of next year. That's not this year, guys. That's December of next year. So Rocket Lab is one of those companies which is like AI tech and stuff like that. So I mean, if it keeps running up, man, I mean, it's trading at, $48, and his break even was $5.82. Like, that's insanity. And there's still a lot of time to go on these options here. So shout out to this person right here, man. That was unbelievable. I couldn't believe that. I was reading that. I was like, what? $3 call options he bought. And yeah, it's worth a lot more. Unbelievable. All right, moving on to the next one here. This person says, I hate covered calls so much. Okay. I still struggle to understand why you would hate covered calls. And you know why he hates covered calls? Because he did covered calls on Open Door. Okay. Why does he hate covered calls now? Because Open Door shot up 80%. How, again, are you, this is like Google last week. How are you supposed to know that Open Door would drop this news here that would shoot the stock up 80%? Nobody can predict that. If you can, you are insider trading somehow. But the fact that you're saying you hate covered calls so much, yes, you have lost 13,000 of unrealized profits here. Yes, 100%. But at the end of the day, keep in mind, when you're selling covered calls on a company like Open Door, that's meme stock, squeeze potential. We went through a squeeze like a month ago. You got to be worried of the risk of that, okay? Especially with a company that can squeeze. If you have a stock that can short squeeze, this is where cover calls are going to be a bad idea. And I hate to say it, but they are, because again, it squeezes 15, 20, 30% in a couple of days. You're out that kind of cash and you have to sell off your shares for cheaper because of that. Okay. So keep that in mind. Now, again, these expire on November 21st. So hopefully nobody exercises it because they hope that's still going to pump higher. But any sort of pullback in Open Door is going to offset these unrealized profits that you lost here. Okay. And again, at the end of the day, what I've talked about and what Ryan always tries to bring up to my attention and they came to him here. Again, shout out to you, Ryan. Sell cover calls above your strike price, above your share price that you have. If you bought Open Door at $5 and you're selling a $3.50 call option, that's a bad idea. If you bought it for $1 and you're selling $3.50 call options, that's good because you're still making money on your shares, right? So keep that in mind as you're selling cover calls. But don't say you hate them so much. You get paid and you also get to exercise at a profit. How could you hate making money on the shares and hate being paid as well? I wouldn't hate that. Yes, in hindsight, it could be a bad idea, but, I wouldn't say I hate them. That's just me. People made money. This is what I'm talking about. This guy turned $5K into $95,000 in Oracle calls. It was unbelievable. This guy, again, Oracle was up like 30% because of how much money they're pumping into AI and how they think that's going to be such a huge push in the future for their company, for Oracle. And man, did the market love it. It was up 30%. I don't know how high it went on the day, but man, oh man, this dude turned $5,000-ish. Let's say it's a little bit more than that because he bought here. Yeah, okay. I think he lied a little. Oh no, he sold this one. Sorry. So he bought 5,000 here, sold it for like 90,000, whatever. It's unbelievable. That's crazy to me. But wow, Oracle printed money, Open Door printed money, Tesla printed money. This dude put 36,000 shares worth of Wendy's. Square patty theory. And he broke down the financials and the logic behind it about where it's trading at compared to like Yum Brands and McDonald's for PE ratios. And it's pretty compelling. But the comments were really funny. People were just like, start flipping those patties, put the fries in the bag because it's a Wendy's thing. I thought it was really funny. But he full-boarded it. He's backing up his statement. He put 100% of his portfolio into Wendy's, 36,000 shares here. I was like, wow, okay. Sure, man. Hopefully it plays out for you as we go here. So that was an interesting one to look at as well. This dude, NBIS, announces a partnership, I believe, with Microsoft. And it went up like 40, 50%. And this dude printed money. So he bought, and again, keep in mind here, okay? Keep in mind how the math works, okay? You'll be like, well, I want to make $1.5 million really quick. Yeah, but he had 1,000 contracts of NBIS at $4.50 each. That puts you at a cost basis of $450,000. So yes, he turned $450,000 into $1.5 million. Don't get me wrong. I'm not going to discredit that. But keep in mind that these two are putting up some very good money. He 3x'd his money. That's all he really did. I say that's all he really did, but yeah, he's got a lot more than I do. I don't mean to say it that way, but he made a lot of money. But again, he has a lot of capital he put into it. He put in $450,000 $100,000. If you can stomach that, then you do it. But if you can't, again, that is a lot of cash to put into play here. So this $1.5 million gain you see here, yeah, 100%. It's amazing. And shout out to him for making some money on NBIS. Again, these companies were printing money for people. Open Door, NBIS printed people money. Oracle printed people money. People were just printing money left, right, and center. Robinhood. This person made a crap ton on Robinhood. Why did they make money on Robinhood? Because Robinhood was put into the S&P 500 Friday after market close. And that is very bullish for the company because fund managers, if you guys haven't seen the video I made, fund managers have to now buy shares to put into their S&P 500 funds, into their mutual funds, into whatever it is you're looking at. And that pushes the price up. This person has 3,600 shares at $28 each. He's made over $336,000. He put in basically about $100,000 worth, and he is up over $300,000. Absolutely amazing. This person is on the opposite side of it. And again, his hood profits are going to be over $10,000 in lost profits by November. So again, this is him selling covered calls on his shares here. And unfortunately, it is what it is. You know, you don't know what kind of news is going to come out. Robinhood announced a lot of really good things. They now are in the S&P 500, which pushed it even higher. It's one of those things, you know. But I think the thing to keep in mind about when you're selling covered calls is that having just such a far spread here of time, having such a big gap in time, anything could happen between May and November. Anything could happen, you know, buybacks, partnerships, new, features, those kind of things. So when you're selling covered calls, I think usually like the max you look at is about like 45 is a sweet spot, but anywhere between 30 and 60 is usually like the best time to sell covered calls. You know, it gives you about a month or two to kind of manage the position. So even if it moves up a little bit, you can then roll it out further. You can close for a loss. Now it's kind of just like you're kind of just stuck here holding the bag and just waiting for the profits to get taken away from you. So unfortunate for sure. I would love to know what his cost basis is for Robinhood. Again, if it's May 23rd, he's probably sitting in profit for Robinhood because Robinhood's been on a huge tear recently, but still kind of sucks as we know. And this person, again, made Robinhood money. Again, added to the S&P 500. He has 2,000 shares, making over $160,000. But let me tell you this, before we get to the end of the video, because we have one more thing to look at here. So, what printed money for people this week? Tesla made people money. Oracle, Open Door, Robinhood, AppLovin, I think, was also added in there as well. It wasn't on this video here. But wouldn't you believe these companies still wouldn't have made you the most money this week? What if I would tell you the best stock that had made money this week for people? I'm not saying this guy did it or not. Octo, this company, went from $1 to $43 in one day. It went up as high as about 3,000% as a share price in one day. Now, if you're curious as to why that is the case, I'll be making a video about Octo in a little bit and about what I'm looking at doing to get into this kind of idea here, but maybe not Octo itself. But a 3,000% change in a stock is absolutely wild. So thank you guys so much for watching today's video. If you made this far in the video, please make sure you like the video, subscribe to the channel, turn on the notifications so you don't miss out on the next week's Wall Street Bets review. Just an unbelievable week in the market here. So I want to say always at the end, I hope you're making money in the market, but these people are made some really good money. Hopefully you took advantage of some money in this week in the market. And as always, guys, I will catch you in the next video.